Recently, I went to Florida to the Valuetainment headquarters to interview Patrick Bet Daivd, and he revealed a lot of things that he's never said before publicly, one of them being that he sold his insurance company for hundreds of millions of dollars. But within that, we also talked about the real estate market because he thinks that everything is going to crash significantly. So we had a pretty good debate about why I don't think that is, and you guys be the judge of who you think is right.
So tell me about this. I've been seeing everything with real estate. And you're obviously very outspoken about where the economy's going. We had already talked about loan officers and what they're going through. So what's your prediction on real estate, and why do you feel that way?
I mean, you just have to look at a few data points. You got to look at rates. You got to look at interest rates, obviously inflation. You got to look at inventory. You got to look at how they keep increasing the rate. So at the pace we're going right now with what they're doing to have to make up for gas prices, inflation, they're going to keep increasing rates. And the closest example we have of today, we have a case study. So when COVID first happened, I was in LA, I was having a board meeting. I'm at Beverly Hills Hilton. I'm about to meet with De La Hoya and Gabriel Brenner to do our board meeting. Last minute, everyone cancels. Mm-hmm. This is March 13th of 2020, 2.5 years ago. And all of a sudden, I turn on the TV, Rudy Gobert gave COVID to Donovan Mitchell, and NHL shuts down, and Disney shuts down, and Universal shuts down, NBA shuts down. I don't know if you remember that day.
Yeah, I do.
That's the day.
February 20th
Yeah,
or something.
it's like, exactly. So I tell my wife, I said, babe, we got to fly back to Dallas. We fly back to Dallas. I drop off the wife and kids. I come back to the office, and I go study to see what's happened with the pandemic in the past and how it's affected the economy. So I do my own research, and I said, okay, out of the 10 pandemics we've had, 9 out of 10 pandemics, 6 months later, the market is the same as it was the day before the pandemic got started. Meaning, if the market was here, market drops, 6 months later, the same. The only pandemic that the market didn't recover after 12 months was AIDS. Everything else recovered 6 months later. So this means 90% chance after this pandemic, what's going to happen to real estate, to what's going to happen to the market. It's going to recover. Okay. So now, if we come and look at today's case study, after pandemic, the amount of money we've printed, inflation, gas prices, policies, who is the other president we can look at that looks exactly close to the one that we have today? You got to go back to Jimmy Carter. That's 78, 80, 81, 82, then Reagan shows up. Okay. What happened during that time with interest rates? Do you know how high interest rates went? Do you know in 1981, if you wanted to get a 30-year fixed loan, what that interest rate was in 1981?
I actually just did a presentation. I don't know if it was 81, but I saw the highest rate was like 17%.
17% is the number, 17,
so
18%.
That's 81, yeah.
So check this out, a CD. If you want to get a CD today, it's like 1%.
Yep.
If you got a CD in 81, you got 17, 18% CD. Crazy. I mean, it's like crazy to get 18% CD, yeah. Right? Okay. Everybody put their money in. But here's what's crazy. Do you remember 20 years ago, in 2002, every day we would see this commercial of a company called ING Direct. Do you remember ING Direct?
No.
Okay. So you're younger. 20 years ago, ING Direct would say, ING Direct money market, 4.25%. ING Direct, 4%. And everybody in America had an ING Direct account. You would put your money there because you're making 4%. Okay. Today, a money market account's going to make you 1.4, 1.2%. You ain't making a lot of money, right? Meaning, just 20 years ago, that was 3% higher. Right. So what's such a big deal to assume that we're going to go back to that? It's not a big deal. We're probably going back to that. Okay. So now interest rates today, if I were to get a house, a 30-year fix, it's about 5.7, 5.75%, right? Mm-hmm. You go back 20 years ago, interest rates were never, from 1970, since 2008, that entire whatever timeline that is, around 40 years, right? Yeah, 38 years. Interest rates for 38 years were never, ever below 6%.
Right.
Interest rates for 40 years, nearly, was always 7%, 8%, 9%, or 10%, right? Okay. So the way it's looking right now, the last 2 years, too much money was made. A lot of money was made, which happy for everybody that made their money. Real estate went up 40.4% last 2 years, across the board. Yeah. So that's counting Toledo, but that's also counting New York and Miami. So 40.4% the last 2 years. A big part of why it's doing so well is because there's no inventory. If you look at data, what happened in April, March, level of inventory, flat to February. February to March, flat. March to April, flat. And then April to May, boom. May to June, boom. If inventory keeps going up, prices of real estate is going to go down. In the next 2 years, could we see a 40 to 60% drop off in real estate? We may see it in the next 2 years. Now, some are saying that won't happen. Some are saying, well, there's no way in the world that's going to be taking place. If people are getting unemployed, if companies are hiring, if companies are rescinding offers today, we have not seen companies rescind offers for 15 years nearly. You know what a rescinding offer is? So you get a job from me, I'm Tesla. We give you a $120,000 salary, and you start day one on July 18th. Well, all of a sudden, we call you July 12th to say, hey, we're rescinding that offer. We're sorry. That job doesn't exist anymore. Go back to your job. So now you have to call your company back and say, hey, remember how I told you I give you a 2-week notice? My mistake, I want to come back to you. No, that's a byproduct of rescinding. So all of these crazy things are happening. 80,000 Bitcoin millionaires have disappeared. Let me say that again. 80,000 Bitcoin millionaires have disappeared. A lot of these Bitcoin millionaires were buying $200,000 watches, million-dollar homes, multi-million-dollar homes, Lamborghinis, Ferraris, Rolls Royce. That's gone. And what are people doing now who own their homes? They're like, oh my God, babe, we got to sell our house. We got to sell our house. Well, let's put it up for $1 million. You can put it with whatever price you want to put it up right now. It ain't going to sell at that price for a minute. Some people may get lucky in some pockets, but real estate's going to take a hit. And I predict, I may be wrong, and I'm hoping I'm wrong. I predict the next 2 years is going to be very, very ugly. Buffett and Musk, there was an article written about them that they talked about the 3 Ps. And the 3 Ps were, first, you predict. Here's what I predict is going to happen to the market. I'm making a prediction. 2, after you predict, you prepare. Here's what I'm prepared. If this happens, this is what I'm anticipating that's going to take place. Then third is you persevere. You have to make it through a bad time. So you predict, you prepare, you persevere. Everybody has to make their own prediction. My prediction is market's going to take a massive hit.
And you think all markets, not just real estate?
I think stock markets, I think equity is going to take a hit. I think bonds are going to, obviously it's the complete opposite. I think equity is going to take a hit. I think Bitcoin has more room to lose. I think commercial is going to take a hit because people are not going to be leasing as much space. I think it's not going to be pretty the next 2 years. Okay, so here's another question for you. Let's see how close you'll get with this one. Since 1850, how many recessions do you think we've had in the history of America?
Just the technical, 2/4 of GDP.
What do you think we've had? How many recessions have we had since 1850, give or take?
1850, that is, I don't know.
170 years.
Let's say 30.
Okay, it's 44. You're pretty close. So if you break it down, we have a recession every 5 to 10 years.
Yeah.
Okay? Historically, we've always hit our 5 to 10 years. Okay? But this is 5 to 7 years when we do the math, right? Do you know when's the last time we had a recession?
2008.
That's 14 years. So you got to realize, we're way overdue. Meaning the last 14 years, we should have 2 recessions.
Right.
We haven't even had one yet. So it's kind of like this. Imagine a bodybuilder, okay? When a bodybuilder is preparing for competition, what happens? At one point in my life, I wanted to be a bodybuilder. So I go to Mr. Olympia and I talk to these guys. What do I need to do to compete? And I told them specifically, tell me the drugs I need to use to compete. I know you ain't going to compete for Mr. Olympia without taking everything and anything under the sun.
Right.
To win Mr. Olympia,
Yep.
I asked them, what is it? Then I went to the doctors and I asked what the side effects are and how long I need to be on these drugs. Then I looked at people that won Mr. Olympia that are my height. Well, no one's ever won Mr. Olympia at my height, ever. I'm 6'4.5".
Yep.
The tallest one that won it was Arnold, 6'2.5", and that was in the 70s, which means back in the days, there was no, 350-pound bodybuilders. He won at 245 pounds at 6'2.5", which is insane to win at that height.
That's a normal guy now.
That's a normal guy today, right?
Yeah.
But today at 6'2.5", you would need to be at 295, right? You ain't gonna win it at that size. It's just not gonna happen. Even when Dorian Yates won, it was 5'10", 5'11".
Yeah.
Now, let me give you an example. So say we take all the major steroids, Deca, D-ball, Cypionate, suspension, put everything, Sustanon 250, Winnie, put everything, map it out, okay? And there's some real hardcore stuff right now people taking that's, obviously we're seeing bodybuilders dying left and right. It's an epidemic that's going on.
Yep.
Now, if I do these things for 6 months, just 6 months, and I get off of it, can my body handle it?
For 6 months?
Yeah, for 6 months.
Probably.
Yeah, probably.
Yeah.
Yeah. What if I go 12 months?
Probably.
Probably.
Yeah.
What if I go 2 years?
You're going to start seeing some effects.
You're gonna start- And what are some of the effects when I get off of it?
Oh, you're going to have man boobs.
Man
You're
boobs? What else?
Be messed up with kids.
Be messed up
Your
with
sperm
kids?
count's going to be low.
What else?
You're going to have to get back on it because your body just can't function without it.
Because your body hasn't produced natural testosterone for 2 years because it's
Yeah.
been fake. So your body's sitting there saying that machine that produces testosterone
It
has
already
taken a
broke.
2-year break. What happens if you take a 2-year break from YouTube right now and you decide to come back? You think you lost some audience?
Oh, yeah.
That's a long ass break, right? Okay,
Yeah.
so watch this. Imagine you do all of those drugs and growth hormone, everything at the highest level for 14 years, and you decide to get off.
Well, you can't get off.
Well, they have no choice because we eventually have to get off. So here's the problem.
Right.
The only way a market crash doesn't take place is what? What is the only way a market crash doesn't take place?
They pump more money and they lower rates again.
Okay, so how much more can they lower rates?
Well,
If they lower rates, inflation goes up,
Yeah.
right? If they pump more money, value dollar goes down.
right.
If they keep pumping more money, nobody's learning how to compete in the marketplace. If they don't allow some of these too big to fail companies to go out of business, they're delaying the issue for your kids to go through it. But we're gonna eventually have to go through it.
Yeah.
So my ideal situation is for us to say, let's just go through it right now.
Let's get it off.
Let's get this thing, and it's gonna be 2, 3, 4 years. Let's go through this right now. Get everybody back in America used to 8% interest rates, 7% interest rates. Make that the norm. Go back to, if you wanna buy a house with 25% down. Nobody should have 90% financing, 85% financing, 95% financing. Go back, you wanna buy a $500,000 house? Perfect, no problem, put 25% down. Can you put 125 down? I cannot. You don't need to buy a $500,000 house. So that's gonna bring the value of these things down. Then we're normal, okay? Do you know in 2008 when the market crashed? Here's the data for you. Do you know what the average home that's sold in America to income? So let me say this again. So income to average price of home that's sold. Meaning, if I'm making $100,000 and the average house that was selling is $200,000, that's what? 2 times,
Yep.
right?
Yep.
Okay. Typically, this number historically in America has been at 3.5 times, 4 times. You know what it was in 08?
What?
In 08, it was 8 times. Do you know what it is today? 8.5 times. So what is that telling you? Listen, these people cannot afford 8.5 times. The few of us can. The average person making $60K, they cannot afford a $500,000 house.
Right.
That's what the number is. So all of this data that you look at, you sit there and you say, maybe this is really happening. Now, either Biden can decide to do another, $2 trillion and whatever.
Yep.
No problem. It's just going to screw it up even worse, okay? Hey, don't worry about it. Here's some more free money. Every time they do more stimulus and free money, guess what that money goes to? It goes to the rich people. The fastest way for the government to hand billionaires $500 billion, you know what to do with that?
Just
Give it
print
to
money.
poor people and middle income families. If the government wants to give Fortune 1000 CEOs and founders and all those guys $500 billion or $200 billion, don't give it to them directly. Give it to low and middle income families.
They'll spend it.
They'll spend it and the money's gonna flow to all those Fortune 1000 companies. Now all of a sudden you're sitting there saying, these CEOs' net worth increased by $500 billion. I wonder why. You gave the money to people that don't know how to handle money and the money rolls to the people at the top.
Right.
Versus saying, let me create an economy where these guys can compete by telling them what they need to do with their finances. We've taken different strategies, and this is why I believe it's going to be ugly the next 2 years if the government doesn't get in the way.
Right. And that's the big if.
It is.
So
It is.
for me, obviously, my investment thesis is, I agree with you 100%. Like, we're just delaying the inevitable, and the moment we finally hit a reset will be when things for the long term get way better. But it obviously would take a ton of pain, like you're saying. But when you're investing too, it's like, all right, but we're not just going based on that. We're going based on what do we think the government's going to do? What are they going to do with midterms? The other thing I think about is two things that are a lot different than the last housing crash. One being all the institutional money in real estate versus, in 08 funds and everything weren't buying single family homes. It just wasn't even an asset class. And now today, you have billions and billions of dollars of homes being purchased by funds that don't really have an intention to ever release them back to the public, right? Like if they do sell, they're selling to another fund. They're not going on the MLS. So I think that a lot of inventory ends up getting basically taken off.
Can I give you some data on that?
Yeah.
Okay. In Q4 of 2021, for every dollar that was spent to buy real estate, what percentage you think was from investors?
Tell me.
20 cents.
Okay.
Just 20%.
Right.
That's a big part of which you're right. What you're saying is you're absolutely right. The Blackstones are coming in and they're buying this building, or they're buying that building, or they're buying this building, for sure. Do you know what's happened to that number in the last quarter? They've dropped 17%. So meaning they're not putting their investments the way they did before.
Right.
Go to builders. Here's what's going on with builders. The amount of things builders were building to the amount of new loans people are picking up right now, it's such a wide difference today that builders are sitting there saying, I know I was giving you this price, I'm discounting it now 4 times. Instead of $600,000, I'll give it to you for $550. No, let's do $500. No, let's do $480. No, I'll give it to you for $450. They're discounting it 4 times in big markets, Austin. These things are documented, so you can find these types of data. So when investors and builders are playing defense and they're slowing down, you have to pay attention. And that's what investors and builders are doing today.
Right.
They've slowed down, okay, where they're not investing like they did last year.
And 100%,
Yeah.
I'm not saying that that's not the case. I mean, I said it, like, even with our fund, it's harder to raise money today, which, big funds are going to have harder times raising money from their guys. And my point is, just with the houses they've already accumulated, like, what happens to that inventory, right? Like, they're either selling to another fund. You can't just liquidate billions of dollars individually.
No, you cannot. So what happens? So go back to that. So if you cannot liquidate, all of a sudden, what do you have to do? You have to sell it at a discount.
Yeah.
Exactly. You have to sell it at a loss. So, and today, the difference between renting and buying, you know how there's a mathematical formula that says, hey, you're $400 better off if you buy a house than you rent a house.
Right.
Today, you're $850 saving if you rent over buy.
Right.
This data is not a good data for realtors to see when they say. Now, on the flip side, if you are an investor and you're buying rental properties, guess what?
It's great.
It's great because you're not affected by it. That's a different game.
Yeah.
You're not.
Which is the game the funds play.
Sure, no doubt about it. But even they are kind of sitting there saying, let's
see what happens.
Let's slow our roll a little bit and see what happens in the next 6-12 months.
Thanks for watching that clip from the Ryan Pineda Show. If you want to see the full interview, you can actually find it in the link below. Make sure you also subscribed on both YouTube and Apple Podcast.